Good morning from London. I'm Anna Edwards alongside Lizzie Burden. We're an hour away from the opening trade. Here's what you need to know. Gold sets its 50th daily record this year as traders weigh geopolitical tensions and prospects for more US rate cuts next year. Elsewhere, the dollar weakens for a second day as the yen leads G10 currencies higher after Japan's finance minister repeats Monday's stern intervention warning. Plus, Danish pharma giant NOVO Nordisk wins approval to sell a pill version of its blockbuster WEGOVY drug in the United States. The company's CEO joins Bloomberg TV later today.
Well, Anna, it's 2 sleeps till Christmas, and that Santa rally does appear to be taking hold. You've got global stocks on a tear. Futures pretty flat this morning, but don't mind that. It looks like it's going to continue, as it usually does in these last 2 weeks of the year. As you say, gold hitting another record high, and we have the yen strengthening for a second day on those comments from the finance minister to Bloomberg TV. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. This is the opening trade. Welcome to Bloomberg TV. So, Lizzie, we have a lot to talk about when it comes to an end-of-year possible Santa rally in stocks. Certainly gold is getting a boost. And the fact we've got gold and stocks moving upwards at the same time, it's been a feature of this year's markets. It's been a feature of actually just the end of last year's markets, ever since inflation was something of a market concern and a market worry. But this dynamic has taken gold to its 50th record in 2025. It's up 70% year to date. It's having its best year since 1979.
Yeah, part of this is the rate cut bets, of course, stoked partly by the governor of the Fed, one of the Fed governors, Stephen Myron, speaking to Bloomberg, saying that you'd get a recession if the rate cut bets don't materialise into actual cuts next year. In terms of global stocks, of course, it is a shorter than usual trading week. I'm very excited about the end of this week, can you tell? But yesterday was significant because you had stocks erasing their December losses stateside, and so now the S&P up for an 8th straight month.
Yeah, absolutely. So we've got stocks and precious metals gaining at the same time. Silver, of course, also having a very strong period, waiting to see what tariff impact we get from the Trump administration there. But in terms of gold, it's a well-rehearsed list of reasons why we're getting higher on the gold price. Of course, geopolitics is in there, rate cut expectations, as you were referencing. But there's also this question of Fed independence and the debasement trade, whether the markets are going to be increasingly concerned about maybe the United States, but maybe more broadly, developed markets and their debt levels, and whether that means that you need to seek out other kinds of havens other than the dollar, for example, or developed market debt. And so that takes us into gold, and certainly central banks and ETFs have also been leaning in that direction. So that's precious metals. Shall we deal with some more of the FX moves this morning?
Yeah, because the yen very much in focus. Is up for a second day. I'm just checking on it. It was 156 per dollar the last time I looked, and that is where it is at the moment. As I say, we had the Japanese finance minister Satsuki Katayama saying to us that Japan has a free hand, the wording very important, to take bold action against currency moves. So that's the strongest warning yet against traders betting against the yen. And we have this fantastic piece on the terminal, the Trader's Guide to Japanese policymakers' language on the yen. They say, first of all, you get commentary on where the market's at, and then they start warning about an intervention. I feel like it's a parent's way of telling the child off.
Or it's some kind of DEFCON scale in another field of life. But yes, you go from this sort of what we're watching description to levels of discomfort to action being possible to action being imminent and needed. And I'm not entirely sure where we are in that, where free hand fits, but it certainly has some an active sound about it. So maybe we're towards the end of that. And certainly we are reminded by colleagues that intervention in 2024 happened 4 times, and it was always around the 160 level. So we're not there right now, and Japanese officials will always deny that there is a particular level they're worried about. It's more about the speed of change, the volatility that they see in FX markets.
Yeah, we should also say that it was partly the euro's strength that helped because of the dollar weakness on the flip side, and then yen strength on the flip side again of that. But of course it is, as I say, a light pre-Christmas trading environment. Nonetheless, dollar weakness seeming to persist.
Yes, and this is certainly having an impact on JGBs, where we've been concerned about yields. Those yields are coming down. Let's talk about some corporate news where we have a bit bit of news flow to talk about this morning, Lizzie, and this is in the shape of NOVO NORDISK. So the ADRs over in the United States were up by nearly 8% by the close of that trading because they have received US approval for a pill version of WEGOVY. And of course, this is all about taking the competition back from Eli Lilly. So they've been in this fierce battle with Eli Lilly for market share, in particular in the really important US market. Now, if they start selling their pill version in January, which is what they've been suggesting, then that crucially gives them a few months advantage over Eli Lilly, who have a drug coming, an oral drug coming, but not until the spring. And so we are looking at that battle heating up in the first quarter of next year.
Yeah, so they've got the approval for the US. They've applied for approval in Europe and other parts of the world. Shares indicated higher on TradeGate ahead of the session. And of course, if this can boost NOVO, so crucial to the Danish economy, could have serious economic consequences for them if they can get back, as you say, in that race against Eli Lilly.
Absolutely, and a lot of the focus in the States will be on the pricing of this. Politically, that's going to be a really important conversation, so they're out there already with some information about how this works in terms of pricing under insurance policies, but also if you're paying for yourself, and also the distribution channels. Will it go through the usual distribution channels, or will there be more direct to consumer, of course, with medical oversight? But that's where we are on the NOVO NORDISK story, and we have a CEO to talk about then.
Yeah, indeed,
with that in mind.
Very CEO, the NOVO boss, Mike Doodstart, later on will be appearing on Surveillance. That's at 1:15 p.m. London time. But after that, we'll get at 1:30 p.m. London time US GDP numbers and durable goods. Then at 2:15 p.m. US industrial production numbers. At 3 p.m. US consumer confidence figures. And then at 6:30 p.m. UK time, a Bank of Canada policy summary.
Yeah, I mean, in terms of the consumer confidence, this is Conference Board consumer confidence, of course, so we're expecting that number to go up from 88 to 91, so we'll see if we get a pop higher there. We're expecting industrial production to stay exactly where it was. Durable goods orders, I find this interesting because we've got so much capital expenditure being devoted to AI build-out. So, you know, if you take out transportation, for example, what does that mean for the broader durables investment conversation? Well, we are expecting that number to come down from 0.6 to 0.3%. So we might be near the end of the year, but there are a few data points still to watch for. Lots still to talk about then when it comes to our guests on the programme. I'm really pleased that we've got Jordan Rochester with us from MIZUHO, FICC strategy head. So we'll certainly get into a conversation about the yen and JGBs in the wake of our interview with the finance minister over in Japan. RUFARO CHIRISERI will be with us, RBC fixed income head for UK and Europe. Not a great deal of progress, it would seem, coming out of that French cabinet meeting yesterday, but still French debt in focus for markets as we head into next year. Ben Gutteridge, INVESCO portfolio manager, will be with us with thoughts about 2026. And Christopher Evans joins us, the Collinson International CEO, to talk about exclusive travel. I guess is one way to sum that up. Access to lounges whilst travelling.
Lovely. Just what we need at Christmas. Well, here's what else you need to know this morning. US President Donald Trump has warned that the Venezuelan president warned him not to challenge the US. At a press conference, the US president was also asked what he plans to do with the oil tankers and cargo seized during the continued blockade of Venezuela.
The United States seized 1.9 million barrels of oil on December 10th.
We're going to keep it.
Where's it? Are we going to sell it or put it in the strategic?
Maybe we'll sell it. Maybe we'll keep it. Maybe we'll use it in the strategic reserves. We're keeping it. We're keeping the ships also.
Here in Europe, new car registrations ticked up for a fifth straight month in November, putting the region on course for a fourth year of gains. According to the European Automobile Manufacturers Association, buyers registered 2.4% more vehicles from a year earlier, led by growth across electrified models. Spain and Germany recorded the biggest gains among major markets. And finally, Larry Ellison is throwing his personal fortune behind Paramount's bid for Warner Brothers, providing an irrevocable personal guarantee of more than $40 billion. The aim is to give his son David the edge in the takeover battle with Netflix. The Warner Brothers board had previously urged shareholders to reject Paramount's bid, but it says it's now evaluating the amended offer. Isn't it nice to have the world's fifth richest man as your daddy?
Well, and backing your deal, yes, importantly. And this is important, actually, the way that this is being done now, the fact that he's stepping in, throwing his personal fortune behind the Paramount bid, because it could actually make quite a big difference to the Warner Brothers perspective on the Paramount bid, because they previously said they previously rejected that offer from David Ellison and co. Because it relied on equity finance with a revocable, not irrevocable, but revocable trust that could, as the name implies, be withdrawn or amended at any time. And so that didn't give the board of Warner Brothers sufficient confidence that that actually was worth relying on. One assumes that this guarantee would be.
Well, yeah, notably neither Netflix nor Paramount's upped their bids yet, but Netflix has done some stuff to its financing as well. It's refinanced some of its debt to try to keep that investment-grade listing. So Paramount, via Ellison, doing his bit as well to shore up the bid.
Yes, absolutely. So we'll look to see what kind of response we get from Warner Brothers as we go through the end of the year and into next. Coming up, we've already been hearing a little bit about European new car registrations. Well, those new car sales rise for a fifth straight month in November, with lower-priced EVs gaining more market share. Bloomberg's Oliver Crook will be back with us with the details on what we need to know about the auto sector right now. Plus, Michael Saylor's Bitcoin treasury company Strategy raises its cash reserve to $2.19 billion and pauses purchases of the cryptocurrency. What does that mean for Bitcoin? We'll take a look at whether Bitcoin has the ingredients to rebound next year. Up next, we'll have more on Japan and possible yen intervention, and take another look at wider markets with Jordan Rochester from MIZUHO. If you want to get involved in any of these conversations, IB plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
We are 46 minutes away from the opening trade, and futures are pointing a touch lower here in Europe. Not big moves, really, when it comes to US futures, either flat to the downside as things stand. But this is in the context of global stocks actually up for a fourth straight day, and it does look like that Santa rally is starting to take hold. So don't be too discouraged by the futures picture. Elsewhere in the world, we have a focus on Japan, of course. The finance minister earlier on just warning that issuing her strongest warning yet to currency speculators, telling Bloomberg exclusively that officials have a free hand to take action.
まあ為替の状況っていうのは必ずしも
Foreign exchange markets don't move only on interest rates or rate differentials. Especially toward the end of the year, around Christmas, trading tends to get thin, and many factors can drive the yen's moves. But the yen's sharp, very short-term movement right as the BOJ governor began his press conference last Friday, that was clearly not in line with fundamentals, but rather speculative. Against such moves, we have made clear that we will take bold action, as stated in the Japan-U.S. finance minister's joint statement.
Now that the Bank of Japan has moved to raise interest rates, the next focus is clearly on whether the government will step in with foreign exchange intervention. How do you see it?
We have
an agreement with the United States that allows us to intervene whenever the yen makes an excessive move. That means we have a free hand.
In the past, a finance official has called a 10 yen move in a little more than a month excessive. So what kind of time frame and magnitude would you consider a sharp or disorderly move? Is there any benchmark you use to assess that?
I can't say definitively whether there's a benchmark or not. I worked closely with currency chiefs during my 20 years at the finance ministry, and I've stayed in close touch with many of those who came after I left. Each situation is different, so it would be wrong to expect the same pattern every time.
Trading tends to thin out around the year-end and New Year period. Is it fair to say that the authorities are fully prepared to respond?
We're always ready to act. That goes without saying.
When it comes to a question of a certain degree of fiscal discipline, there are various ways to interpret that. For example, how much the government relies on bond issuance or how much JGBs it'll issue. Could you share a bit more on how you're thinking about these points?
I
can't give you specific numbers, but even after the supplementary budget was passed, we made it clear that the total amount of government bond issuance, which, after all, is what puts pressure on the market, did not increase. At this time, we're talking about the initial budget for fiscal year 2026. We're confident that it won't be something that places an undue burden on the market either.
There are concerns in the market that Japan's fiscal position may be deteriorating. What message would you like to send in response to those concerns?
それは数字の取り方からすれば積極
By
財
switching to active fiscal policy, we knew before we started that in the first fiscal year, some of the finance numbers would deteriorate. But that isn't the problem. We've spent 10, 20, even 30 years in a situation where economic growth barely picked up no matter what we did. There's no point in just doing the same things as before. We need to make a decisive shift, to concentrate resources and boost our growth potential. I believe we'll see a strong pickup in investment next year. And if you look at projected tax revenues for next year and the year after, I think what looks like fiscal deterioration now will prove to be only temporary.
Japan's finance minister there speaking exclusively with Bloomberg's Takashi Umekawa. Great conversation there and a perfect place to start with Jordan Rochester, a FICC strategy head at MIZUHO EMEA. Jordan, really nice to have you with us. So let's lean into your knowledge of the yen and JGBs and what's happening here. We've heard from the finance minister then talking about that government, the Japanese government, having a free hand. How much of a signal is this to you that there's going to be some kind of intervention to stop the weakness that we're seeing in the yen?
Well, as interviews go, that was gold dust for FX traders. The Bloomberg reporter there asked all the piercing questions that we wanted to know. Does the Japanese have a free hand to go ahead with intervention from the US, the sort of nod of approval if they need to go ahead? And the answer is yes. So that's kind of the news information for me there. There was some uncertainty whether Scott Bessent in the past had said that the BOJ was behind the curve in rate hikes, so we weren't sure whether he was going to approve FX intervention without more aggressive BOJ hikes. That's probably the most informative part of that interview for me. But there's also the other points about how in the past you had the Ministry of Finance's FX chief Kanda-san said around a 4% move over 2 weeks. Your reporter said 10 big figures, something similar to that amount, was a disorderly move and that would trigger intervention. Well, she didn't really put the same sort of benchmark on it, so we perhaps don't need to use that metric all the time to figure things out. And also the point about the levels of dollar yen being detached from fundamentals. At the moment, if you use interest rate spreads, absolutely dollar yen is detached. It should be trading more like 151 or even lower. You could argue in the low 140s if you were using the classic 10-year FX spreads on swaps. But when it comes to the Japanese and whether they will intervene, for us, it's more about the level, and it's around 158 to 162 that the market has in its mind for when FX intervention will happen or could happen, because those are the levels, Anna, that they did it back in 2024. Now, over Christmas, this is fin trading. If they were to intervene, they'll get a lot of money, a lot of bang for their buck. You could at least see a 3% move lower in dollar yen historically on these interventions in low liquidity sessions.
So, Jordan, yes, I was going to ask you about whether it is the level or the pace of change or the volatility that we see that you think is still front of mind. Now, we have a new administration in Japan, as you pointed out. There are certain things we can rely on from the previous administration and maybe certain things that are evolving. So previously they've said it's not about the level, it's about the volatility. Is that just a bit of a smokescreen? Do FX traders just still think it is about the level and it's about 160?
They would say it depends. That if we got to 162 during the Christmas session, then it's going to be a volatile move. So the level and the volatility are tied. Obviously, if we creep up there over the course of 12 months, it's not exactly alarm bells for the Ministry of Finance. So it really depends, Anna. But I'm talking more specifically over the next few weeks. So if we were at 162, you could argue that's a pretty outsized move over a session where there's not much information to get us there.
And just staying with Japan, Jordan, do you expect the weakening of Japanese government finances to be temporary, as the finance minister just told us there? Or what is it that actually brings foreign buyers back to JGBs? Well,
actually, there is tons of foreign buyers in JGBs. They are holding up the JGB market. Something that is not discussed enough is that actually there's a buyer's strike amongst the life insurance and the sort of less so the pension fund industry, but we've had net selling of ultra-long end JGBs from the life insurance companies domestically. And who's been mopping up that supply? It's been foreigners. And that is why JGB yields have been edging higher, as foreigners demand higher yields. It's also another problem. It's why dollar yen has decorrelated from interest rate spreads. It's because foreigners are FX hedging their exposure and getting a big pickup in the FX carry as a result of that. And if you look at a sort of 30-year JGB, a US-based investor is getting close to 6.5% after doing a foreign exchange hedge. So that's why dollar yen is detached from its interest rate spreads, because the foreigners are involved in big size. Historically, we've never seen anything like it. And the FX hedge is making it detach the sort of classic correlation between fundamentals and foreign exchange.
Okay, really interesting. We also got some comments from Isabel Schnabel yesterday saying that, this is at the ECB, of course, saying that she doesn't expect rate hikes in the foreseeable future. What an about turn, Jordan. We had such a repricing after her last set of comments, indicating that hikes would be the next direction of move. When do you expect the ECB to pivot?
I think the pivot will probably come in the second half of next year when they start talking about the idea of rate hikes in 2027, probably Q4. The sort of story for Europe has been that we've been very gloomy for years. And the mistakes I made in 2025 was being too gloomy on the ECB, probably in the first half and maybe Q3 as well. And what's clear to me now is that the German data is going to significantly outperform those gloomy expectations, especially thanks to the fiscal spending. And we've just had a cutting cycle, Liz. So what tends to happen at the end of a cutting cycle is you're on hold for a while and the next move is a rate hike. Because of the recency bias of the sort of lost decade of inflation and QE, we're all sort of thinking maybe it's not going to be such an aggressive hiking cycle. But I can see it's quite possible. 2027, the market will be happy with the idea of higher interest rates for the ECB.
Yeah, what does the German economy, what's the upside risk, I suppose, for the German economy, Jordan, in 2026, given the amount of fiscal spend we're going to see on infrastructure, on defence? How are we going to see that shape the German story?
Well, the upside is that we're seeing this big spend on defence and infrastructure, and I'd expect to see that in the manufacturing figures. But what we're actually seeing is, yeah, sure, manufacturing has been supported in the surveys, but it's the services sector that has responded more in kind to the sort of optimism in Germany. Is that connected to the defence spending, the sort of ancillary services underneath it? You need engineering works, you need sort of contractors. Is that due to the infrastructure as well? Similar story, the ancillary services. If that's the case, Anna, if the service sector rebounds, that's the largest employer rather than manufacturing for Germany, because the manufacturing story is pretty miserable for Germany. They've got industrial production recession, really. The other upside is peace in Ukraine and Russia. That could see massive drops in natural gas prices. The UK stands out as one of the worst in terms of highest electricity prices for manufacturing processes in the OECD. Germany's in number 2 spot for that, so it's not really a good place to be. So if energy prices come down, maybe that's another upside for Germany. Whilst that would be a deflationary story for the ECB, it would definitely boost growth. And it'd be a nice Christmas treat as well for everybody. You can wrap up your Christmas presents, pass over your teddy bears to family and friends. That's the sort of moment that the market's been long waiting for. If it was to happen, you'd have a reconstruction effort for Germany. Lower inflation initially, but you could see a big rebound in optimism.
What a thought, Jordan. I just want to end on the UK briefly, because we had that perhaps unexpected vote split from the Bank of England, less dovish than we might have thought after the inflation reading. What is the bar for the BOE to cut rates again? When do you expect them to move?
Well, they're now off the sort of gradual cycle that they were, and they've made life more complicated for themselves. Personally, I think Andrew Bailey should have gone ahead with a rate cut in November. He just was wanting to hold out for that budget to see what it would do. And the budget's done exactly what we thought it would do. It's done a fiscal tightening. It also lowers inflation next year with targeted measures on energy prices. It could knock off around 0.3 to 0.5% from the Bank of England's inflation forecast. We didn't get an update of those forecasts at this meeting, even though they will internally have seen some numbers. What I can see happening is I think they go ahead and do a rate cut in February. Now that is not priced in at all. It's around 2 basis points or less. And I think that's a high conviction view for me. We've got a CPI figure, we've got a labour market report and a PMI. It would get the Bank of England back on their quarterly path, which they shouldn't have deviated from in the first place. And if you read the individual members' vote splits, Catherine Mann could have even voted for a cut at this last meeting, so it's possible.
All right, Jordan, great to see you. Merry Christmas. Jordan Rochester there, FICC strategy head over at MIZUHO EMEA. More next. This is Bloomberg.
Welcome Welcome back. 30 minutes from the start of cash equities trade here in Europe, and we have here on the opening trade a look at the futures picture for you, and it looks pretty uninspiring, pretty flat this morning. We've got this narrative around a global Santa rally taking place in equity markets. Is that under threat a little bit? US futures are a touch weaker, down 0.1% on E-minis and Nasdaq futures, so we'll keep that in mind. That said, I mean, there could have been reasons for European stocks to go higher this morning, Lizzie, because we actually closed out the European session with a little bit more to go in US stocks to the upside, but not a huge amount.
Well, in your bond space this morning, let's check in on that. We have the 10-year bund yield down 2 basis points at 2.88, with similar moves across the rest of the curve and across the continent. But if we focus in on French bonds, they have been slipping as the nation's 10-year yield was pushed to the highest level since 2011. So that's the broader context. Of course, the political backdrop is that the French government's urging lawmakers to approve emergency legislation to keep the state running. We can get more on this now round the desk with RUFARO CHIRISERI, who is head of fixed income for the UK and Europe over at RBC Wealth Management. Nice to see you, RUFARO.
Good morning.
Let's start with French bonds because, of course, you've been underweight OATs for a little while now. What's your kind of outlook over the coming months with all of this political turmoil in the backdrop?
So generally, our view for France is we've been underweight since sort of the start of, I suppose, the fiscal troubles that we'd seen, and we continue to see sort of French bonds trading with some sort of premium around that sort of fiscal and political stability aspect. And we have seen now that Italian BTPs are now actually trading through French OATs. So that's just a reflection of just a risk sentiment in the market. So that continues to be a view of ours for some time.
But is it that much different to other countries? I mean, I'm thinking about the UK, right? And I'm surprised, perhaps unfairly so, whenever anyone comes around and says that they're up for gilts, when, you know, I've got to focus on the May elections next year, and I'm hearing so much uncertainty about whether Keir Starmer, the Prime Minister, will still be in office in the summer next year. How does your OATs view compared to that for gilts?
Well, we're actually a lot more positive for the UK. So we think some of those fiscal troubles, I think they're sort of behind the UK. We've now have a much bigger headroom than we previously had. We've also got the budget itself is not necessarily too inflationary. It's actually taking back away from inflation. And it's also not sort of taking away from growth too much either. So we think some of those fiscal concerns are now behind us. We also have issuance that is now skewed more towards the short end, which is positive for markets, given that sort of longer end demand is now diminishing. And we also have a profile that is a lot more attractive for the UK in terms of more easing from the BOE. So we think gilts in that dynamic have the potential to outperform.
But where that fiscal consolidation's been backloaded, you have faith that that's going to actually materialise?
I think what we've seen from the budget and from the comments from the Chancellor is that they're pretty much sort of with the view that fiscal consolidation does need to occur and they need to show some restraint. And I think with some of these measures that we've seen, that the market is now believing that. So we think actually the fiscal picture is not too much of a risk for the UK at the moment.
OK, RUFARO, good morning. So sticking with this European theme then, I mean, European Central Bank, your outlook there is that we get no change in interest rates in 2026, and that seems to be quite consensus, lots of people saying that. What's the risk to your view? Are you concerned that actually maybe there is some inflation or growth outperformance risk because of what Germany is doing, or is there some risk of underperformance?
I think that the risks are sort of two-sided. I think if we look at it on the angle where perhaps if there are some delays in some of that fiscal stimulus coming through, then of course that growth picture doesn't look as good as currently forecast. We actually think growth is going to be about 1.6% in the euro area next year. But I suppose part of the aspects around that is if inflation does undershoot quite meaningfully from the ECB target. We can see that the ECB has some tolerance around that, but if we continuously see, I suppose, large downside surprises, then it may start to make the ECB think that perhaps inflation is now getting too far away from their 2% target. But for now, it seems like there's a fairly high bar for tolerance for movement around that 2% target.
And so that's the risk, is it, that inflation undershoots? And what would drive that? Would that be because of imported goods from China, and there's that risk that China exports its deflation not so much to America but to other parts of the world now. Is that the driver that you're concerned about?
We think there could be multiple drivers. It could be partly to do with, say, perhaps if it's a weaker growth outlook, that just naturally sort of draws down demand and inflation in tow. It could also be a stronger euro potentially, or it could be also that influx of imports coming into the region. And perhaps some of the aspects that we sort of thought about the growth story is really that decline in savings that we're going to see from households. And if, say, households do continue to hold some of those savings and not spend, then perhaps that sort of doesn't feed into that stimulus look that we're sort of thinking about.
What about the Bank of England? We were just discussing the last vote split with Jordan Rochester there. Why do you still see 3 more cuts from the BOE in 2026 when surely what that vote split last week taught us was that the hawks are really stubborn no matter what's happening on inflation?
So interestingly, I suppose on the surface with that 5-4 split, it does sort of seem like that there is still quite a strong hawkish cohort. But when we sort of look through the comments, and we can sort of see from the 2 hawks, their language has softened a little bit. And so we think that language softening a little bit. Then we also look at the doves, the most dovish members, their language has also sort of become even more dovish. So I suppose perhaps sort of looking through the comments, it is a bit of a tricky time in terms of for the BO to determine where that neutral rate should be. And I think part of that is sort of what's feeding into perhaps what we've seen in the vote split. But we do think that weakening growth outlook into next year, we continue to see the labour market continuing to loosen, that feeding positively into wage inflation. We think the BOE in that scenario would actually ease more than what's currently priced in the market.
Yeah, Catherine Mann's been warning about higher inflation expectations, that feeding into wage demands. Why are you less concerned about that?
I think part of that is that we had seen that some of these household inflation expectations have been running around 4% for about 6 months or so, which is a fairly high level. And of course, that was feeding through from food inflation. So we started to see that come down. And so perhaps maybe that's why we've seen a bit of softening in language from Mann in the statement, just in terms of perhaps some of those risks are starting to diminish. And that's one of the risks that we've seen, that if household inflation expectations continue to be somewhat anchored where they are, that can potentially keep pushing sort of wage pressures.
So, RUFARO, some of these narratives are very domestic, some of these markets are very global. So let's think about the global influence. Thinking about US growth, for example, and where you see that going. Q3 GDP 3.2%. You actually see upside risks to the growth story, though, going into 2026. That sounds to be in contrast to the downside risks that you see to inflation in the Eurozone. So what's driving that sort of discrepancy? Is this all about the AI trade and what that might deliver?
I think there are a number of aspects that we're thinking of for growth in the US. You have some of that fiscal stimulus coming through. You have some of that deregulation. You have some of that fading away of, I suppose, some of the tariff concerns. And, of course, the AI capex boom as well. So we do think we'll see sort of trend growth in the US next year. And we also continue to expect that the euro area next year will also have pretty decent growth as well.
And the Fed, will they keep cutting? We had a couple of conversations yesterday with people saying to us, next year's not going to be half as much about central banks. It's going to be much more about fiscal actors. We talked a bit about the fiscal stories here in Europe. Will that same narrative play out in the States? What will be the relationship between the Fed and the fiscal?
I think there'll be key focus on both aspects. I think we're expecting sort of some of those aspects from the One Big Beautiful Bill to sort of filter through. There also been discussions about some of those tariff rebate checks and sort of some of those sort of aspects that may be fiscally stimulative. So we think that will continue to be a big focus for the US. But then also more so around what is the Fed going to do. We're seeing quite a big dispersion in terms of where the Fed expects rates to be next year. And we continue to expect one more cut from the Fed next year. And think that'll be in the first half of the year rather than in the latter part of the year. We think it'll become a bit tougher for the Fed to continue cutting rates into the second half of the year, into next year.
OK, thank you so much. Thanks, RUFARO. Thanks for joining us. RUFARO CHIRISERI, Head of Fixed Income for UK and Europe at RBC Wealth Management. Well, thinking about the US and views on where the Fed might go, Fed Governor Stephen Miron says the central bank risks sparking a recession unless it continues lowering interest rates next year. He also told Bloomberg that data on housing costs was impacted by the government shutdown.
It is true that the shelter stuff was somewhat distorted by some of the quirks of recovering from the shutdown. But it's also true that the shelter data were distorted for most of the year because of really long lags with which shelter inflation is calculated. If you look at market rents, they've been running at about a 1% rate for about 2 years now, right? That's not indicative of any price pressures in housing whatsoever, but it takes a really long time for measured shelter inflation to catch up to that just because of various quirks of the statistical measurement process that I got into in my speech last week. So I do think there was maybe some downward bias in last week's print, but at the same time, there's been tons of upward bias in data for the entire year, and it's inappropriate to say, okay, well, we have to adjust for the downward bias, but we're going to accept the upward bias. That itself is a deeply biased position. We've got to be clear-eyed about both.
Well, do you feel like, and yourself included, but do you feel like members of the Fed are cherry-picking what about inflation they like or dislike?
Well, I mean, I think that for the last few months, we've had data come out in accordance with, I think, my view of the world. The inflation data have steadily come in cooler than expectations. The unemployment rate has poked up, potentially above where people thought it was going to go. And so we've had data that should push people into a dovish direction. And I think it's somewhat problematic if you see those data coming out and you don't adjust your policy prescriptions in a dovish direction. What does that say about the reactiveness of policy to the economy? I think it reflects very poorly upon the institution.
At the end of that speech at Columbia, you nodded to the fact that recessions are inevitable. Fed's job is to kind of forestall them as much as they can. Policymakers' jobs are that. I'm very curious, when you look at the labor market in particular, the rise that we've seen in the unemployment rate, that's the kind of rise we've seen customarily before recessions. How do you assess the risk of there being a recession here in the near term when you look at the labor market, for instance?
So I don't see a recession in the near term, in part because we are adjusting our policy rate by lowering it, which is appropriate. My view, as I've described, is that a variety of shocks that hit the economy, including changes to the population growth rate due to changes in the border policy, have pushed what we call the neutral rate down, and that policy needs to adjust downward to reflect that downward shift in neutral. If we don't adjust policy down, then I think that we do run risks of rising recessions. I don't think it's too late to prevent that, and so I think it's important that we keep on adjusting our policy rate down. But at the moment, it's not my base case, in part because I think that we ultimately will end up continuing to adjust interest rates down.
Fed Governor Stephen Miron speaking there, warning that unless there are more rate cuts, there could be a recession, Anna. I thought it was really interesting speaking to RUFARO a moment ago on the Fed, and her saying that actually she expects the Fed to cut in the first half of the year, not the second. And that's the opposite of what lots of analysts are saying, that if there's an expectation of a dovish replacement for Chair Fed Powell, Jerome Powell in the second half, that actually Powell himself will try to hold back the FOMC in the first half.
Well, yeah, let's see. The timing of those meetings and when that new chair wants to make their mark, I suppose, is part of it. It will be interesting to see. I mean, I liked Anne-Marie's question, actually. I thought that was really interesting about cherry-picking from data, and I wonder if that's just increasingly, if we are in a slightly more politicised world in central banking broadly, if politicians are going to be more outspoken with their views on what central bankers do, are we going to see central bankers falling into that trap of maybe perhaps cherry-picking a little bit from some of the data?
And that's the danger when you have flawed and delayed data, isn't it?
Yes, certainly with that inflation print that could tell you anything you wanted, basically, because it was so flawed and so partial.
More easily write it off. Well, coming up, we're going to get back to the corporate story, turning away from central banks for a moment. NOVO Nordisk winning approval to sell a pill version of its blockbuster obesity shot WEGOVY in the US. It's just one of our stocks to watch. That's next. This is Bloomberg.
Welcome back. This is the opening trade at 7:46 in London, which means 14 minutes until the start of the trading day for Tuesday, the 23rd of December here in London. And European equity market futures looking flat to negative. That's kind of in keeping with what we're seeing stateside, where futures are a little bit weaker. Let's talk about these markets with Adam Linton from Bloomberg Markets Live blog, who joins us on set this Tuesday morning. Adam, very nice to have you with us today. So let's start with what we're seeing in bond markets here in Europe. They've been trading for 15 minutes or so. Yields a little bit lower this morning, and sort of maybe unwinding some of the higher yield narrative that we've been dealing with over the last couple of weeks. Some of it sparked by Isabel Schnabel, and then she was busy speaking again yesterday. What are we thinking about the European bond market story?
Yeah, I think at the front end, yields could potentially be capped for now. I mean, a bit part of the story, obviously, has been global dynamics as well, but a lot of it has been some of these remarks we did see earlier in the month for Schnabel, potentially talking about the prospect of a rate hike sometime in 2026. And, you know, we've kind of seen her walk these comments back to some extent, and she's basically more kind of wants to make the point that she doesn't think there'll be any more cuts, but she wasn't necessarily making the case for hikes. And then also, I think a part of the macro narrative that we've kind of seen over the past week is some people got quite excited about this Bundesbank report, saying we could see markedly stronger growth in 2026. But if you look at some of the Bloomberg survey data, economists are actually a lot more measured in their expectations for what we could see in the first half of the year. So things, you know, like domestic demand that could potentially be relatively weak. And as I've kind of mentioned previously as well, some of the structural issues facing Germany still linger. And also these fiscal plans, given the government situation there, they could also face a bit of a delay in implementation.
OK. I do wonder if someone's had a word with Isabel Schnabel. She wants to throw her hat in the ring to be the next ECB president. I wonder if someone's told her off for being too hawkish. But that aside, Adam, you've had the yen moves as well that we were discussing earlier in the programme, the euro strength helping the yen. Do you think that there's too much optimism priced into the euro at the moment? Yeah, I think that is fair. I mean, part of it, obviously, that, you know, I mean, I've been kind of downplaying this rate hike story that we're looking at for 2026. I think that part can be parked as well. But a lot of it is, again, upbeat view of European growth. And I think 2025 has been a year of Eurozone resilience. But I don't think, you know, the economy is running hot. I think there's severe problems in Germany. The France fiscal situation is a source of concern. And also as well, we're not out of the woods on tariffs. Yes, we've been more resilient, but, you know, we need to see what the longer medium-term effects of these tariffs are, because they're facing an unfavourable trade situation, and I don't think the market's really pricing that at the moment.
You're quite constructive on the dollar. Is that because the US does well or badly? Because you can make links between either scenario to dollar gains.
Yeah, I think I'd say I'm constructive on the dollar because of, you know, relative growth prospects. I mean, if you look at a product like Dixie, basically that is almost a trade on euro-dollar with a bit of yen thrown in. And, you know, I think, OK, we've seen a bit of yen strength creep in recent sessions, but I don't think that's going to be sustained. And then I think, yeah, the US growth outlook, I think, is a lot more upbeat than that of the Eurozone. And I think that's a trade that kind of will potentially focus minds next year. And if US growth does hold up quite well, that could potentially temper some expectations for Fed easing in 2026. And I think that will be reflected in the dollar.
Just finally, given your view on ECB cuts, where would that leave European stocks in 2026?
I think the problem for European stocks is a lot of the upside has been driven by this phenomenal rally that we've seen in financials. And so I think you're looking for, you know, potentially European stocks to try to extend from somewhere. And I think that source of strength will potentially wane because it's been on such a long run. And also the lack of IT sector is also a problem for Europe.
All right, perfect. Adam Linton, Bloomberg's Live blogger Adam Linton there. We thank you so much. And let's dive into some of those individual stocks that could be on the move at the European Cash Open. Louise Moon is here with that. Louise.
First one we're looking at that's really in focus today is NOVO Nordisk, the Danish pharmaceutical companies. They've won approval for a pill version of their blockbuster obesity drug WEGOVY, and that's in the US starting from January next year. You can see, I mean, this is really crucial in their kind of fight to stay competitive against their US rival Eli Lilly. You can see how much divergence there is between their stock prices this year. We've got Eli Lilly in the white at the top and Novo down below, really lost in their share price so far this year. So expect this to be a bit of a boost. So that's going to start from January next year. They've also put in approvals for Europe and elsewhere for 2026. So we'll expect this to be a bit of a boost for Novo today. Some good news in terms of their progress into the US market. Next one we're looking is Ørsted, the Danish wind company. Now, some potentially some news that's going to weigh on their stock today. The Trump administration has banned leases for all 5 wind farms off the east coast of America that are currently under construction. And this is a big deal. You know, their total commitments are about $28 billion. It's been a tumultuous year, and this is kind of the latest, I guess you could say, almost attack from the Trump administration on clean energy. And this has really been hitting Ørsted. You can see this, you know, there's this big slump in August on various things that have happened from the Trump administration towards the industry, and this could weigh on their stock today. But there was this note from Jefferies analyst saying that the language used and, you know, prior experience should bring some optimism that the projects potentially could restart quickly. So we'll have to wait and see how that pans out. But for the moment, the likes of Ørsted, Vestas, you would expect to see their stock kind of dropping on that news this morning. And then the final stocks that we're looking at are European automakers. Now, this is on the back that new car registrations rose for the 5th straight month. You can see these gains that we've been having for the last few months, and it would put Europe on course for the 4th straight year of gains for new car registrations. So good news for the industry, and this is all being led by electric vehicles. So you'd expect this to benefit the likes of Volkswagen, Stellantis, Renault, BMW. They've had a bit of a mixed picture so far this year, but expect this to be a bit of a gain, and it kind of adds to wider recent relief for the industry. So we'll be keeping a close eye on those today.
OK, Louise, thank you very much. Our equities reporter, Louise Moon. And important to point out, Louise was right that we are focused on all of those sectors, including the wind sector, but important to say that that story broke in the middle of the European trading day yesterday. So we saw some impact on Ørsted already. So I guess the question for today is whether we see another day of losses or whether we've seen all the selling around that story, whether there's more to come, whether the market thinks that's it. They're happy to linger where they are right now.
Yeah, and it's interesting that two of those stocks to watch are Danish. I was also just musing about when I was covering Donald Trump at his golf courses in Scotland and just how much he hates the wind farms.
Yes.
So perhaps unsurprising that we got that decision for Ørsted.
Yes, and this time it's around security, national security concerns, isn't it?
But he thinks they're an eyesore.
Well, that too. There is that. But this particular story is about national security, according to the US administration. So we'll watch that sector. We'll watch NOVO NORDISK as well, because this, again, another US story and another US mover in yesterday's session, actually, but after hours over in the US on the ADRs. So we'll watch how that translates into the European session today.
Yeah, I think it's about 7% the moves on the ADRs, but compared to a 44% drop overall so far this year. So let's see if Novo can reverse some of those moves today in its competition with Eli Lilly, this big development here for Novo.
Yeah, absolutely. And so who gets there first with the pill form of, WEGOVY, as it's called in the Novo case, who gets there first with the pill form is going to be important. And so January is the target date for Novo. It seems a little bit later in the year for Eli Lilly, so maybe that gives a few months head start to NOVO NORDISK. So we definitely have a Scandinavian flavour to things this morning. We'll keep an eye on all of the Danish-listed businesses that we've been talking about, and we'll get an update on some of them from our team in Copenhagen a little bit later on in the programme. Coming up then, we'll bring you that opening trade here in Europe. We've got European equity markets then for Tuesday the 23rd of December, looking as if they could open flat to negative. That's what the futures picture has been looking like. US futures are pointing a little bit weaker this morning. We'll see whether that Santa rally story of yesterday comes back to markets or not. The sun really trying to rise here in London, struggling a little. This is Bloomberg. Welcome back to the opening trade. Now, a few minutes to go until we get the opening trade for European equity markets. So often useful to cast our minds back to yesterday's US session and see where we were when Europe closed up. Well, that's what is indicated by the yellow line. So Europe closed as the US markets were heading higher. Could there be slight room for improvement here for European stocks this morning? Not really. I mean, US stocks pretty much drifted after the European close in a sort of sideways direction. Is this all of the Santa rally we're going to get, Lizzie? I can't quite believe it. Maybe we've got another day or two in us in terms of the positivity in global stocks. But we do seem to be quite positive. We've seen stocks rallying globally, new highs for global benchmarks around equities, new gold highs, a 50th new gold high. So those two things going together, which isn't always the case. This is the futures picture for European markets. Then we are expecting a little bit of downside, but should we call it flat? That looks pretty flat to me at the start of trade. What have we got in terms of stocks and sectors in focus?
Yeah, if we're not going to get big moves on an index level, let's look at the stocks. NOVO NORDISK in focus this morning, Anna. It's got US approval for its WEGOVY obesity pill. It needs this, of course, to defend its market share from Eli Lilly, which has said that it's going to have its own oral obesity pill approved by March. So Novo potentially getting a few months head start here. Novo ADRs up more than 8% after hours, so keep an eye on them. Staying in Denmark, Ørsted, flagged by Louise Moon here, and generally the wind stocks after Trump banned leases for all offshore wind farms off the east coast of the US. And then the autos as well. We had new car registration numbers for Europe this morning, ticking up for a 5th straight month in November, really putting the region on course for a 4th year of gains. So keep an eye on the autos names at the open as well, Anna.
Yeah, we'll certainly keep the autos in focus. We'll get an update on that sector shortly from Oliver Crook. On the wind stocks, we'll keep saying Ørsted, of course, was down more than 10% in yesterday's session on that story. So the question today is really about whether we get another day of weakness for wind stocks on the back of that further regulatory headache in the United States for some of those offshore wind farms. So European equity markets are opening, and as is appropriate for this time of year, a little slowly perhaps, but the FTSE 100 down by 0.1%. The Stoxx 600 overall, though, up by 0.1%, waiting for the other markets around Europe to open up, keeping our eye on those wind stocks for another day, seeing if we get another day of weakness there. We'll see if we get a big pop in NOVO Nordisk, pretty heavily weighted still, despite the year-to-date drop that we've had. So I am being told we have got to move higher in NOVO Nordisk, as you'd expect from that story that sent the ADRs higher in the United States, or after hours, I should say, in the US yesterday. The IBEX down by 0.1% or so. The DAX pretty flat. So overall, we are flat, Lizzie, on European equity markets. What are you seeing in terms of sectors and individual stocks?
So NOVO, as you say, NOVO up 6.5% at the moment off the back of that approval for its obesity pill. Ørsted down again by 1.5% as things stand. And we can take a look at the rest of the wind sector in just a moment. But looking at the sectoral breakdown across the continent, you've got just over half of sectors in positive territory this morning. Healthcare leading the gains today, up 0.8%. Real estate about 0.25% higher this morning. Autos, though, at the bottom of the basket, that's down 0.4%. I'd have thought it might be higher given the positive news that we got in terms of new car registrations. But if you dive into that sector in particular, some of the names, Mercedes down 0.4%, BMW about the same, Stellantis managing to eke out gains this morning, up 0.5%. But overall, a negative story for the autos.
Yeah, it's very much a story driven by healthcare this morning, isn't it? So we've got 0.7% higher for healthcare stocks, and NOVO Nordisk is the big gainer there, up by just over 6%, followed by Abivax and Genmab. So a very strong day for the healthcare sector, and as you say, autos and auto parts the worst performer.
But quite a bland day when it comes to the Stoxx 600, only up 0.1% this morning, and US futures down 0.1%. Let's get analysis with Ben Gutteridge, markets insight strategist at Invesco. Good to see you, Ben.
Well, it was an obvious segue there. It's a bland day, so let's go to our bland guest.
Don't write that kind of stuff, Ben.
Look, I want to ask you about this Santa rally. Is that all we're going to get?
Well, maybe we'll get a bit more. I mean, I think this time of year people will reflect on like their 2026 outlook and more, or the following year outlook, and more often than not, that would be positive. And I think that's like where we're seeing things at the moment. Obviously, we're happy to debate all of this, but would suggest we're looking at resilient growth backdrop. Clearly, job creation is slowing, but not falling off a cliff. Resilient growth. We've got, I would suggest, fading inflationary pressures. Of course, again, could debate that in the short term with tariff noise, but it's given the cover. The jobs market, modest weakness, and the more benign inflationary outlook is giving cover for the Federal Reserve to cut interest rates. That has something of a Goldilocks flavour to it, and that leaves us feeling positive about equities in 2026.
Is the Fed going to have to be that dovish if you're so positive about growth?
Well, no, quite. It doesn't have to be that dovish. You would sort of suggest a commitment to sort of pausing on rates could unsettle markets. But if the features that are encouraging the Federal Reserve to cut only modestly is because growth is both resilient and maybe inflation isn't so fast in falling, I think the markets can deal with that. It has sort of dealt with that in the past. We are in a stop-start sort of cutting cycle, and the markets have moved well despite the periods of sort of pausing on those cuts. That's because growth has been okay.
Okay. I love talk of Goldilocks, Ben. This is excellent. It's Tuesday the 23rd of December, and it's not seasonal, but it's positive, and we like to be positive this time of year. So what's the biggest risk to the Goldilocks scenario then? Is it growth disappoints? Is it inflation's actually stickier than expected? Or what could go wrong with the sort of positive outlook? Because we speak to a lot of people who are quite positive about next year.
Well, I mean, I guess I would be more concerned about inflation. For those who are sort of more concerned about the jobs side, because the trend in job creation is slow to sort of quite little, is that the next step would be sort of negative job creation. The profits to the amount of people who are employed is at like pretty healthy levels. So it doesn't look to us as though like meaningful job cuts are coming. So I guess it would be the inflationary concerns. The noise around tariffs can put sort of pressure under sort of goods price inflation. Also, I'm sort of minded about the prospect of like excessive stimulus coming through. If this sort of super Supreme Court prevents tariffs from being employed, I think that's sort of quite stimulative with all the combined with the one big beautiful bill. All of that is a very large budget deficit, not much of an offset. That could be inflation. Whilst the market might take some enthusiasm in the short term from tariffs like being removed, actually I worry that the bond market might take some fright from that because it could have could be too stimulative and a bit more inflation coming through. Not our base case, hence why we're positive too, and we want to be at this time of year, but certainly a concern for us.
Yeah, let's unpack that a little bit then. What kind of market reaction broadly we might see if the Supreme Court stands in the way of President Trump's tariffs as imposed so far? Because on the one hand, the market might quickly come to the conclusion he'll find other ways to get the revenue. On the other hand, there might be a nervousness in bond markets around the fiscal impact of this, that we don't have the money coming in that the Treasury thought it would. How would you expect that to play out?
Well, I mean, as you so neatly point out, there are some conflicting forces here, but I mean, I would always have been of the view that tariffs are like a tax, you know, and that's deflationary, that's sapping demand, it discourages spending because prices are a little bit further out of reach, and therefore removals of tariffs are like a tax cut and stimulative, and it could be that, you know, that level of stimulus is appropriate because the jobs market is sort of so quiet, but I would have sort of said the state of the US economy is such that it doesn't necessarily need that level of stimulus, and therefore it could be, on balance, inflationary. In the short term, you know, of course, hedge funds having a fun on the day or the week, you know, this is growth enhancing, equity markets are at it. But I would just be alert to the bond. I think one of the reasons the stock market has done well this year is because the bond market has been relatively well behaved. If the long end of the yield curve starts moving higher, then that's going to be a problem, I think, for equity. So alert to that risk.
Another risk maybe is on AI, or can we just leave the bubble fears behind in 2025?
Well, I wouldn't be of the view that we're in a bubble necessarily. Valuation's not so egregious as we've seen in like sort of 99, but I think the market's definitely or seemingly a bit more discerning, and I guess it centres upon free cash flow. It's, you know, obviously there's a huge amount of investment going on, and the market has been sort of fully supportive of all of those moves. But at the moment, it looks as though, well, what impact is that investment having on your free cash flow? How are you funding these big investment programs? And so not all of them are winning now. So I'm not talking about a bubble or a collapse of that sector. I just think there's sort of a degree that they're cancelling each other out. It's like if one's winning, then one's revenue is another person's another firm's free cash flow hit. Yeah. So there could be something of an offset, which is, of course, a big part of the US market that's going sideways. Maybe we want to look elsewhere. Sorry.
There seems to be two views at the moment, though, that some people think that there'll be a cannibalisation, and other people think that there'll be a broadening out of the trade, and that everyone can win. More people could win from AI. What do you take?
Well, I mean, that's certainly what we hope, that, you know, that there could be a broadening out, and that these AI infusion could yield efficiency gains across many more businesses, and there are more and more examples of that. Wouldn't sort of necessarily get too excited about that as a means to wanting to overweight into the AI theme, because of course there's such big stocks within that sector that dominate, that could have more of a tricky time. Some could perform, but I think some could be weak because of this sort of free cash flow challenge, because it's such a big part of the American market. Not talking about abandoning that part of the market, but just think about there's some opportunity elsewhere.
Yeah, so you're not really down on the US, but you are looking for opportunity elsewhere. So that brings us to Europe then, Ben, and or even to Asia, and maybe opportunities in China. Where are you seeing the opportunities at the moment then? What most excites you for 2026?
Well, all of the above. How about that? But I certainly think, you know, Asia and China is just sort of an improving profitability story. You know, I was not minded to believe that. I mean, it's a few years ago or a year or so ago, a very noble policy choice, common prosperity, you know, for an emerging economy, but that's about limiting pricing power. You hear things about anti-involution, not a phrase I was familiar with up until a few months ago, but that's about limiting competition and enabling pricing power, and you see more buybacks from that part of the market. It's as though management have much more control over the decisions they're making rather than the state. Of course, not all is perfect, but it's just, like, against very low expectations, there's just more of a sense that profits are more keen a part of the agenda.
That oversupply story is being tackled, and that actually we might see a little bit of uplift in pricing.
Yeah, that's right. Yeah, I mean, you look at the solar industry in the past, a classic example of China knocking overall competition in its wake, but not doing it by delivering profits. Whereas EVs, maybe AI, certainly the internet giants are casting a shadow over that sort of concern about an absence of need for profits.
But what about Europe on the receiving end of China? Because we constantly worry about the deflationary pressures being imported from Beijing.
Yeah, I mean that is a concern, and certainly with on the vehicle side, the autos side, maybe we could sort of see something of a response. You'd expect they need to do something to defend. I mean, I guess the businesses themselves haven't been fast enough out of the gate on the EV production side, but policymakers may respond, because that is certainly a challenge to its industrial sector. But there's lots of other positive stories in Europe. Unemployment at very low levels. The ECB has done its cuts. There's decent funding rates. Banks are lending again. There's obviously fiscal support. Europe doing its classic thing of putting up some obstruction in the pace of policy sort of going through, but we still think it's there to be. It will be executed. So there is positive stories in Europe as well.
And Germany, investing around the German theme?
Well, yeah, I mean, I think that is the major sort of source of that fiscal thrust, and maybe the industrial sector's sort of got a little hot, but the fiscal support that Germany is putting through, perhaps it could do it a little faster, is encouraging for us to invest in Europe.
Yeah, the Bundesbank was talking about second quarter next year, so we'll see. Ben, thank you very much. Thank you for your time.
My pleasure.
Ben Gutteridge, Market Insight Strategist at INVESCO. Let's have a look at the core six and see where we're trading. I'm going to suggest that NOVO Nordisk might be dominating the conversation here. Yes, there we are. NOVO Nordisk up by 5.6%. Thank goodness for Novo. We have some substantial corporate news to talk about then this morning. Elsewhere, some more minor moves coming through. Schneider Electric down by 0.3%. Let's dive into some of the details here then. Louise Moon joins us to look at some of these individual stocks. Louise.
As you say, Anna, NOVO Nordisk is the story of the day, up over 5%, almost 6%. And that's after their pill version of WEGOVY, their blockbuster obesity drug, got approved in the US. So that's the start from January from next year. So really boosting that stock today. That's really the key one that markets are watching today. Another one that's being looked at is autos over in Europe. A bit of a mixed picture, so Volkswagen being dragged down alongside Renault and BMW, but Stellantis being the standout gainer there, up just over 1%. That's after new car registrations in Europe rose for the 5th straight month. So it's good news, led by EVs, but only really seeming to boost Stellantis this morning. As I say, that's the bit of the standout into the green, so we'll be keeping an eye on those. The next one we are focusing on also is Ørsted, the Danish wind company. Slightly dragging down into the red. That's after, as Anna mentioned, this is a bit of a day two. That's after their stock slumped yesterday on the latest move by the Trump administration onto the sector. This is to suspend the leases of all the wind farms off the east coast of America. So staying firmly into the red as markets open today. And then lastly, we're looking at Pets at Home in the UK. They've got a new CEO, James Bailey. He's come from Waitrose, was managing director of Waitrose. So boosting their stock. This is a bit of a positive news for Pets at Home. They've had a tough year. They're in the middle of a turnaround, a bit of a retail turnaround to boost their profits. So this could be seen as, a positive news to end the year, moving into 2026 on a bright note. That's how we like to end the year. Louise Moon, thank you so much, Louise, from our equities team with our movers after the open. And we're going to dive into one of them, and that is NOVO Nordisk. Shares bulking up. Who wrote that? An early Christmas present for me. As it wins US approval to sell a pill version of its blockbuster WEGOVY weight loss drug. We'll bring you all the details on that stock next. This is Bloomberg.
Welcome back. This is the opening trade. It is 8:17 here in London, and the picture for European equity markets, well, we're making modest gains across European stocks up by 0.3%. How much does that have to do with Novo Nordisk? That market doing a lot of heavy lifting, it would seem, this morning. The FTSE 100 up by 0.2%. The DAX also similarly a little bit firmer. Let's go to that Novo story, though. Novo Nordisk's shares have jumped after it secured FDA approval for a pill version of its weight loss jab, WEGOVY. The pill is expected to launch in the United States in early January. Let's get more details from Bloomberg's Copenhagen bureau chief, that is Sarah Scholin, who is with us right now. Sarah, thank you so much for joining us. So how significant is this for a business such as Novo that's been facing increasing competition?
Well, I think increasing competition is maybe a bit of an understatement for the challenges it's had this year, Anna, but this was very much expected. Novo has already said they expected the FDA to approve the pill before the end of the year. And Denmark is closed for the next 3 days, and then we're closed 2 days next week. So this was about time we got this news. This doesn't take away from them that this is very positive news. They're getting headway on Eli Lilly for about 3 and 4 months on their obesity pill. So we'll give Novo Nordisk this first mover advantage. And you can say that they had this before, right? When they first entered the obesity market, they basically created it. There wasn't an obesity market before Novo Nordisk launched Wegovy and Ozempic. But Eli Lilly quickly really gained up on them. So now Novo Nordisk is back to getting this first mover advantage. It has a new management. It's a bit more aggressive in its way of dealing with the business and marketing and sales. So they might actually be able to leverage and capitalize this first mover advantage better this time. And that's something we will be looking for in 2026.
Yeah, how much do you think it can reinvigorate the share price? I'm looking at it year to date, down nearly 50%.
Well, it definitely needs some invigoration. This is a first step, right? We knew this was coming. They already flagged that they were going to get the approval, probably going to get the approval. But now we're finally getting it. And we've seen with Novo Nordisk over the past year and a half, that they, especially with CagriSema, we got last year right before Christmas as well, that sort of overpromised and underdelivered. So it's really good for the investors now to see they expect something and then we're actually getting it. So the big test next year is going to see if this really can compete with Eli Lilly. It's a really good pill. It gives really good weight gain. The analyst says it has that disadvantage over Eli Lilly's pills that Novo's pill has to be taken with a meal, where Eli Lilly maybe has more flexibility. On the other hand, Novo's already launching in January, and we all need to shake off that little bit extra Christmas pounds that we got over the holidays. So maybe they can really get that headway 3 to 4 months, and that will be the change for them. I think this is a really good first step in health invigorating. Yeah.
Yeah, that's a bit dark, isn't it? The launch in January rationale. I wonder if they've thought about that. What about the pricing story then, Sarah? Because they've given us a bit of detail around pricing, and no doubt this is going to attract a lot of political attention in the United States.
Well, obviously, and they also said they're talking to Hims and Hers about putting it on that platform, and they could set it at a price as low as $25 per month for some of the patients. So obviously, this is something that's going to be out for the broader public. So we're Novo is hoping that this won't get too much pushback.
All right, Sarah, really good to see you. Sarah Scholin there, Bloomberg's Copenhagen bureau chief. We thank you so much. And we're going to be hearing from the Novo CEO himself, Mike Dooster, that conversation on surveillance at 1:15 p.m. London time. Well, staying in Europe, new car registrations ticked up for a 5th straight month in November, putting the region on course for a 4th year of gains. According to the European Automobile Manufacturers Association, buyers registered 2.4% more vehicles from a year earlier. Bloomberg's chief Europe correspondent Oliver Crook is with us around the desk. And Ollie, you've been diving into these figures. Talk us through what the numbers tell us.
Yeah, I have to be honest. I love going through these tables and actually getting under the hood with actually what we saw from these sales. No, listen, it's true. I mean, across Europe, as you said, 2.4% increase in sales of cars across Europe. But when you start looking at the actual brands, that's where things start to get a little bit interesting in terms of the actual portfolio of what kinds of cars have been selling in Europe. And this is super interesting, particularly since the Europeans have delayed their ambitions to basically ban EVs. What we're seeing right now is overall the sales in the EU, this is specifically in the EU, year to date, up 1.4%. When you look at petrol cars year to date, they're down almost 20%. Diesel down almost 25%. And that means that they had to make it up somewhere else. Hybrid electric vehicles up 15% in Europe year to date. When you look at the battery electrical vehicles, up almost 30%. So we're in a position now where in the month of November, hybrid vehicles have outsold. Now, this is not doing battery electric. This is hybrid vehicles vehicles, both petrol and diesel combined in the month of November. So you're seeing that transition away from these combustion engines, despite the fact that we're giving a little bit more runway to the European regulators. So potentially a bit of flexibility for the car makers is something that is welcome, but they don't really need it. You're seeing the consumers starting to make that transition, at least in Europe.
Yeah, that is interesting, isn't it? The way that the politics means that the deadline for switching has been extended, or, you know, that's the direction we're moving in lots of parts of Europe, and yet maybe at the time that we're getting some momentum from consumers and a bit of a pivot there. So which are the brands that have been not doing so well then, Ollie?
Yes.
The ones that are suffering?
So I'm trying to bring a little bit of all, so the good, the bad, and the ugly. So the good, we had a year to date in terms of Volkswagen. You know, it's been a very challenging year for Volkswagen. It's been a challenging year for a number of the car companies across the world. But Volkswagen ups year to date 5.5%. Some encouraging news there for VW out of Germany. Stellantis, which of course has been a bit of a basket case this year, losing their CEO and really trying to figure out what to do with their lineup. Year to date in Europe, sales down 4.5%. And Porsche, going back to the Volkswagen family, down 13% in terms of their sales year to date. If you look actually at the month of November for Porsche, they were down 30%, 29% in terms of Porsche sales just this month. And then sort of going for the bright spot within that bouquet owned by BMW, Mini, up 18% in the month of November.
Interesting. It's only Stellantis that's managing to eke out gains off these numbers this morning. But, Ollie, just talk us through what impact BYD, of course, the Chinese maker, has had in Europe.
Yeah, so we're looking also at the battle of the BEVs. We're looking at the electric vehicles. Who are the ones that are really, truly benefiting here in Europe? And this, we always look at BYD and we look at Tesla. What do we see? Year-to-date sales for Tesla have been absolutely crushed in Europe, down about 30%, 28%. They now have 1.7% of the market share in Europe. That is a diminishing number. BYD, on the other hand, you look at the sales year-to-date, up almost 300%, 276% year-to-date, picking up some of that market share, really closing the gap a little bit there with Tesla. That being said, you know, Tesla has production within Europe. BYD does not yet. They're paying tariffs on those cars. So imagine once they start rolling cars off the assembly line without tariffs, what BYD is going to do to this market.
Fast-moving situation, fast-evolving. Oliver, thank you very much. Bloomberg's Oliver Crook with the latest on the auto sector. Now, the CEO of ASML says Europe is losing the AI race to the US and China. Soaring demand for semiconductors has turned ASML into Europe's most valuable listed company. But in an interview with Tom McKenzie for Bloomberg Tech Europe that took place last month, Christophe Fouquet said that Europe needs to do more to attract the whole AI ecosystem.
If you look at the overall AI ecosystem in Europe, it's very weak in any way you look at it. And, you know, today there could be a debate about will the US or China win the AI race. I think it's clear who is losing it today. It's Europe. Europe is behind. And it's true with semiconductor, right? If you look at semiconductor, basically take our shipment. The shipment of our system to Europe today is maybe 1 or 2% of our total business. And that's been the case for the last 10 years. So there is no buildup of semiconductor manufacturing in Europe, not advanced, not mature. Why is that? Is because there is also no consumption of semiconductor in Europe. Most of the consumption, as I said, of advanced chips are in the US because the company that develop the AI chips are not here. So Europe is behind, and to catch up, Europe has to create the condition basically to attract this entire ecosystem back to Europe. And that's a major task, to be honest.
Because we have the engineers, we have the researchers, we have ASML.
Yeah.
But Europe does not own the chip space.
Well, we have the engineers, we have the researcher. I would say we have the market. I think the European market is a great market.
The ASML CMO Christophe Fouquet speaking there to Bloomberg's Tom McKenzie. Coming up, we're going to speak to Christopher Evans, CEO of COLLINSON International, which operates one of the world's largest airport lounge networks, in plenty of use at this time of the year, of course. As we look at European equities on the stock 600, now up 0.3%. We're waking up. The FTSE up 0.1%. The CAC 40 flat. The DAX up 0.2%. And as we look across the pond, pretty flat when it comes to Wall Street futures as we head towards the open over there. Plenty more to come. This is Bloomberg.
Welcome back. This is the opening trade. 30 minutes then into our trading session, and it seems as if markets have caught some festive spirit from somewhere, and we've returned to that positivity that we saw in global stocks yesterday. US futures had been pointing downwards just a little. Now they are flat to positive, and European markets seem to be gaining. It's not all NOVO Nordisk that is having an impact, but it isn't all of that because we have the DAX higher by 0.2%. The CAC 40 is pretty flat. The FTSE 100 up 0.1%. But overall, Lizzie, gains of 0.3% on Tuesday, the 23rd of December. Maybe we'll take that.
Well, certainly it looks like the 23rd of December when it comes to volume this morning, Anna. Look at it here. Really not much to be writing home about when it comes to the volume. Actually now turning negative. But as you say, you've got more members higher than lower this morning. Gains for the Stock 600 as a whole. If we dive into who some of the leaders are, we've talked about it at length already today. NOVO Nordisk, the standout gainer this morning, up 5.6% on the US approval for its obesity pill. Hopefully, NOVO will hope it can give it a lead on Eli Lilly by a couple of months. But this bringing up healthcare as a sector, it's leading the sectoral basket. And if we flip over to the laggards as well this morning, we have some losses, including for Richemont as a whole, luxury suffering a little. Schneider Electric down 0.3%, and Diageo down nearly 1% this morning. It's near its weakest level since 2017, Anna.
Lizzie, let's focus in on some of the other stories we need to keep across this morning. We'll start with precious metals. Gold is trading at a record high, the 50th day that it's done so this year. Silver also at a new all-time peak. Gold's haven appeal has also been amplified by rising geopolitical tensions and prospects for more US rate cuts next year. President Trump is warning Venezuelan President Nicolas Maduro not to challenge the United States. Speaking earlier, Trump also vowed to keep oil seized from a supertanker, but declined to say if he's looking to oust the Venezuelan leadership. Larry Ellison is providing a personal guarantee of $40 billion in equity financing for Paramount's bid for Warner Brothers Discovery. The move aims to give his son's company an advantage in its takeover battle with Netflix. Warner Brothers has confirmed receipt of Paramount's amended offer and said it will evaluate the proposal. Lizzie.
Well, it's that time of year when we're thinking about travel, going home for Christmas, and as global airports face unprecedented overcrowding, the world's largest lounge networks pivoting toward ultra-exclusive private terminals to bypass the terminal congestion. The new tier aims to restore premium exclusivity by moving high-net-worth travellers away from the standard airport crush. For more, we're joined by Christopher Evans, CEO of Collinson International, who's behind all of this. Good to have you with us, Christopher.
Great to be here.
I wonder what the gap was in the market that you were trying to fill with this new pass.
I mean, we've seen a strong rise in the kind of ultra-high net worth individuals. They're looking for something particularly special, a really elevated experience. And what we're looking to do is launch a brand new solution that brings the same experience you'd have from flying with a private jet to those that are flying on commercial jets. So as you said, there's an off-terminal opportunity, bypassing the security challenges that you have, which means you can then go into a very premium location and then take a limousine straight to the plane.
OK, so how different is it from the lounges that are already there? What does it get you access to?
I mean, it gives you access really to the speed through the airport, often bypassing that challenge within the airport. So people are looking for the ability to minimise the time they spend in the airport, and then an increased level of luxury and exclusivity in the lounge. And as I said, getting the opportunity to go straight to the plane is another level that hasn't been experienced typically.
Christopher, good morning. So it seems that it's about speed. It's also just about solitude. It's about being without other people. Is that something that is driving demand for this kind of product?
It is indeed.
There's some of those lounges that are in existence that get pretty busy.
Too busy, Christopher.
I think what we've seen is there's incredible demand for airport lounges. It's probably the most premium desired benefit on credit cards at the moment. And yes, there is strong demand for it across the globe. So this really gives an opportunity to be away from those others in a much more refined environment.
So let's focus on London, because in London there's been much talk recently about the Windsor Lounge at Heathrow, which is actually a separate terminal, isn't it? A private terminal for customers who can afford to pay for that. And that gets you a lot of solitude. It probably gets you a lot of speed through the airport as well. Is that something that your new pass then, the Priority Pass Private, PPP, does that get you into the Windsor terminal and other places like that around the world?
It does indeed, and the Windsor Suites is a good example of that. And they really pride themselves in the level of service that they offer. I was talking to the person that was running it, and they ensure that no one will meet any other people within those different suites. They coordinate your whole route
that
through
is our idea of luxury these days, is it? Such a busy world. That,
it is.
Yeah.
And some people that go there actually want incredible privacy. They don't even want to have others know that you're even in the country. So they manage that in incredibly careful and considered fashion, and have been doing so for many years. And it's that type of experience that we're replicating across the globe.
But what's your strategy to keep it feeling exclusive? Is that's what people want? Do you have to up the prices when it gets too busy in the lounge?
So this will indeed be a very different tier. We're going to be very considered about the number of people that are invited into that programme. We're assuming it will be an invitation-only programme for Priority Pass Private. And yes, within the main Priority Pass network, we are seeing the need to kind of tier the offering. We're looking at bringing in solutions such as pre-book, so people can guarantee that access when they arrive at the airport, something that's been incredibly popular since we've launched.
And so does your strategy basically mirror what's going on in airlines? Because you've had expansion of the premium offer from airlines. Is that what made you want to do this?
It's really listening to our customers and our clients who have kind of highlighted this need and this opportunity. But we are seeing, as airlines are increasingly tiering their offering, we're seeing that within the main lounge network. So our own locations and joint venture arrangement in the UK has kind of a standard VIP lounge and then an elevated lounge experience called club rooms. And we're seeing the demand for higher-end experiences and are catering that by building our network with a range of quality of experiences.
And where do you expect demand to come from for this kind of product? Is it sort of high net worth individuals in the Middle East? Is it the US? I mean, I'm sure you'll say global, but what are the dynamics you're watching?
So we're actually launching it in the Middle East, so we see particular strong demand there. If you look at the number of growth of millionaires in the UAE, for example, it's the second highest in the world. So that's our launch market. Very strong demand within the Middle East, but we are building out that network globally, so across Europe and the US, talking to our key clients across the globe. There is strong interest and demand for those most premium, most valuable customers.
I do have to ask you, the transatlantic route, have you seen, do you expect there to be less demand of European travellers going to the US or vice versa because of the Trump administration?
I think we've seen a slight small drop-off in some of that transatlantic routes, and we see it through our insurance business as well. Much more pronounced probably from Canada, but actually we're expecting it to be more of a short-term trend. There is very strong demand for those travel routes and those travel corridors.
And how much of the demand for your services is premium and corporate, I should say?
Probably the largest percentage of our business is B2B2C, so it's really premium banking customers that typically take that on a credit card basis.
And as we're not worrying about global recession right now, far from it. We talked to lots of strategists who are very excited about the prospects for global growth next year, talking about the AI boom and other things that they're leaning into. I mean, what do growth rates look like for your kind of product at the high net worth sort of level? Is this a booming sector?
I mean, it's a very strong growth sector, actually. So you're seeing travel growth is very strong. So we're expecting more than 5% growth coming into next year. We're expecting peak seasons. We saw the highest ever number of traffic through Thanksgiving. We're expecting the same within the UK over Christmas. Probably more than 300 million visits across the festive period. But yeah, there's married to that is strong demand for elevated experiences when people travel. People are looking to really start their journey with something special, which means there's strong demand for things like lounge. And the premium card markets are growing across the globe, both in mature markets such as the US, but we're also seeing that in emerging markets.
OK, Christopher, thank you very much. Thanks for joining us. Christopher Evans, CEO of Collinson International. Up next, the Bitcoin breakdown. We will be diving deep into the market and looking at the rise and fall of Bitcoin in 2025. What are the prospects for next year? Stay with us. This is Bloomberg.
To see price actually slide this year on Bitcoin and generally in crypto markets. People are talking about the cycles, of course, of the crypto markets. But my view on capital markets and Bitcoin markets is always a long-term view. I've no doubt that this is a correction eventually into higher prices in Bitcoin and into the transition of more than $100 trillion becoming digital assets over the next 20 years.
When we look at where we are a year from
from now, it's been overall very positive for the space, and we've seen much more regulatory clarity coming out of this. And I think getting into next year, it's we're past a point of no return when it comes to regulation and institutions interacting with crypto markets.
Some of our guests talking about the volatility in the crypto space. You had Bitcoin sprinting into 2025, full of potential, but since reaching an all-time high in October, the biggest cryptocurrency has been pretty fragile. Traders revamping their approaches heading into the new year. We can get a view on some of those with Ana Herrera, Bloomberg's senior crypto editor. She joins us now. Good morning, Ana. Just walk us through whether Bitcoin has the ingredients to rise in 2026. Rise again.
I mean, it certainly does seem so, right? The environment, as some of your previous guests were suggesting, is very changed, right? We have now the president of the United States, a big crypto fan. There's legislation in the U.S. supporting crypto, more legislation coming. We've seen banks starting to offer crypto trading to some of their retail clients in Europe. And yesterday we reported that JP Morgan Chase, U.S.'s biggest bank, is considering offering crypto trading to institutional clients. All the big asset managers have ETFs. So obviously the environment is very changed from, 2022 when there was a big crypto crash. But despite this, the price has been a bit disappointing towards the end of the year. We had a big crash on October 10th, and it's been Bitcoin has been in a sort of funk since then. So we'll have to see what happens next year.
Yeah, so heavy going, despite all the positives in that sort of setup, that regulatory setup that you point out, Anna. Thinking about some of the clues that people look to here, the digital asset company Strategy Inc. has raised cash reserves and paused Bitcoin purchases. Now, does this signal something of a bear market? Does the market watch really closely what Strategy is up to?
Yes, one of the biggest trends this year was these digital asset treasury companies, and obviously the model was pioneered by Strategy. And the fact that they paused purchasing must, for some, signals that they think a crypto winter is coming. But maybe they could also say, well, actually, we think maybe the price will go up and it's not a good time to start buying again right now. So it is, again, one of those big trends that was leading this year, and we are seeing perhaps unraveling towards the end of the year. But again, we'll have to see what happens to all these digital asset treasury companies, most of which are not even following Bitcoin anymore, but some of the smaller coins.
Okay, Anna, really good to see you. Bitcoin now down 0.8% at $87,515 a token. Bloomberg senior crypto editor Ana Herrera, we thank you. Well, having a look at what's on the diary this morning, we have at 1:30 p.m. London time US GDP numbers coming out, durable goods as well, followed at 2:15 p.m. by US industrial production figures, and then at 3 p.m. by US consumer confidence numbers. And then at 6:30 p.m. we have a Bank of Canada policy summary. So still plenty on the diary.
Yes, there is a bit of data, isn't there, out the United States? Certainly. It is the 23rd of December. We'll see how much we have to talk about in terms of data tomorrow. But for today, we have some data. Sticking with the United States then, Bank of America CEO Brian Moynihan says the US economy will be strong next year, due in part to companies ramping up their AI investments. He spoke to Bloomberg about what he sees as AI's growing economic benefits.
The AI investment's been building during the year and is probably a bigger contributor next year and the years beyond. And so if you look at the data center build out, which is one of the ways it evidences itself, that's a big deal. If you look at client spending, like us spending on AI, that's higher than it was last year. But frankly, overall spending levels are shifting towards that, not necessarily growing at a mid-single digit rate type of number. So I think that's part why the reason we feel constructive for next year. We think AI spending continues. We think there's benefits to the American taxpayer from tax rebates, lower taxes due to the tax bill going through and being effective for next year. And we think the expensing and other bonuses for businesses are good. So all that leads to our confidence that we go from basically a 2% type of growth level this year, plus or minus up to 2.4%, which is all due to that. And AI is kicking in more and more. And so it's not all attributable to AI, but that's having a marginal impact that's pretty strong.
So much of the American economy is supported by the consumer. And you at Bank of America have a really powerful viewpoint into the American consumer. How's the American consumer doing? Because it has been very strong. There have been some people saying it's starting to slow down.
You have to step back. We look at American consumers, 70 million consumers, putting $4.5 trillion plus into the American economy every year. And we've tracked the way that goes in the American economy for many years. And so in the third quarter, it was up about 5% over last year. As we look at the fourth quarter here so far in October, November, I'd say in the 4.5%, which is very consistent with a very solid growing economy. You know, at the end of the day, it's going to work against wage growth. And we see in the underlying consumers we have wage growth, i.e. their paychecks are going up. And so the labor market's flattened out a little bit in terms of job growth and things like that. It's normalizing in terms of unemployment, but you still see underlying wage growth. So the American consumer spending at 4-ish% more November this year versus November last year is a very solid backdrop. The credit quality of the American consumer is strong. And then you hear a lot about this discussion about different rates of growth among different income terciles or thirds. So if we look at the bottom third, middle third, and top third of American income people in the Bank of America customer base, we do see differences, i.e. the higher income and middle income are growing faster. But even the lower income third is still growing, and that's all good. And that means, why is that true? Companies are employing people, they're paying people. Now the labor market's got a little soft, and as we look forward at 4.5, 4.6 unemployment, that is gotten worse, so to speak, than it was at the beginning of the year. But frankly, this goes back to the normalization question. If you look at the 10-year average unemployment, the 20-year, the 30-year, or 40-year, it's 5 and 6%, as you go back through time. And so a 4.5 to 4.6 unemployment rate is a very strong relative unemployment rate. It's just a lot of the years it's been below 4.5% has actually been in the last 10 years. So people are very used to numbers now, which were part of the tightness in labor in the 2017, 18, 19 era. Then you had the pandemic and it retightened. And so it's normalizing, but we feel good about all that, and the consumer's in pretty good shape.
Bank of America CEO Brian Moynihan on Bloomberg's Wall Street Week with David Weston, and talking AI there and what it can do, Lizzie. And I think next year is going to be so fascinating, isn't it, in terms of the questions we're going to be asking around AI. Just so many of them. I mean, from a big macro perspective, we're going to be asking continuously what impact this is having on the economies around the world, on jobs, on growth, and our corporates really seeing the returns from the investment that they're making, because that's really going to be about the truth about what this delivers.
Yeah, one conversation that really stands out to me from 2025 on this programme was with Karen Ward at JP Morgan Asset Management, and saying really that she's focused on the business to business, the B2B impact of AI, more so than consumers. She told me that consumers don't really pay for this sort of thing. And I said to her, I buy loads off Instagram, Karen. But she says, the big AI companies can't rely on that to give back the return on investment that they need from all this CapEx.
And one of the things that's really important in the differences between the late 90s and now, and the big boom we had around internet stocks then, was that there was a lot of fuss about the fact they weren't profitable. And now the companies that are investing so much in AI, they are profitable. They have free cash flow. They can spend it on some of this CapEx build out. But that's not necessarily the case of everybody in AI, is it? So some of the large language models, waiting to see who's going to pay what to use some of those products, that will be part of the conversation as well as we are going through 2026.
Yeah, you have the likes of Jeff Bezos saying that, yes, there'll be societal benefits, but there'll be lost investment along the way. So I suppose in 2026, that's when we find out where that money gets wasted. But look, we've got a busy day in terms of the economic calendar as well. We're expecting a handful of releases in the US, including the GDP and durable goods numbers. For more, we're joined by Bloomberg's cross-asset strategist, Ven Ram. Ven, which are you prioritising out of these data releases?
Morning, Lizzie. I think that the third quarter GDP is expected to show a modest revision. This is the second reading. But what I will be looking at is the personal spending. If personal spending is forecast to tick higher, and I think that if personal spending keeps going robustly, I wouldn't be worried about the soft patch in the US economy. I think that, what is pertinent to keep in mind is that the Fed, in the December dot plot, they showed in the summary of economic projections, they projected growth of 2.3% for next year. That's well above trend growth of 1.8%, and also a revision of 0.5 percentage points, which is a pretty significant acknowledgement of the productive boost that AI is expected to deliver. So at this point, today's data is not going to be groundbreaking. But it looks like, as Brian was saying, mentioning earlier, I think the labor market is flattening out. But I think that the overall augury for the U.S. economy is pretty good.
Yes, and let's go to Japan then, Ven. If we can park the US for the moment, let's go to Japan, because there's been a lot of focus on Japanese assets as we get towards the end of this year. We've had this interview with the Japanese Finance Minister, Satsuki Katayama. Really interesting comments there about having a free hand, that being interpreted by markets as having a free hand in terms of US pressure to intervene in currency markets. And we're seeing that the market is listening. The yen is up by 0.7% today.
The yen is up on some short covering for sure, but I think that, there is no alarm in the markets. If you look at the options market, Anna, what the volatility pricing is subdued on US dollar yen cross. And I think that speaks to the market's frame of mind that, look, we've had plenty of jawboning from the Japanese authorities over the past couple of months, coinciding with Takaichi's ascent to power. But the markets are thinking that, look, this is all bluster and this is not going to go too far, because if you've got real inflation, real rates in Japan trailing elsewhere and in deeply negative territory, you've got to acquiesce to a weaker yen, and that is what we are seeing. And that fundamental trajectory can't be changed by no matter what the finance minister says about the scale of intervention. Yes, the yen has the potential to rebound on any intervention, obviously, but the question is whether it's going to stick. We have seen prior intervention episodes last year when the yen bounced back huge, but then went all the way back and brought us back to the state we are in at the moment.
Ven, I'm looking at the euro up again today against the dollar by 0.2%. 117 is where we're at today. How much is this yen recovery actually about the euro rather than the words from the finance minister on maybe an intervention?
Definitely early in the Asian morning, it was the euro that was helping the yen rather than anything about the intervention comments. So it only speaks to the fact as to what I was saying earlier. It's, the markets are by now very well inured to comments from Japanese officials about, the yen trading at a significant deviation from its fundamentals. We all know that. The yen is one of the cheapest currencies if you look at the real effective exchange rate. But to what avail? In the short term, what matters to the markets is the real inflation-adjusted interest rates. And if inflation-adjusted interest rates are not going to keep up with the inflation, I think that the yen is going to be a laggard, no matter what the Japanese government says.
OK, Ven, thank you very much. Ven Ram joining us there from the Markets Live team with thoughts on what we're seeing in Japan and what to make of the data that we're going to get out later on today. So the GDP print could keep us busy to some degree later on in the session. Lizzie, in terms of markets, what we're watching the gold price. Of course, we talked about this at the top of the programme. 50th record in 2025. Plenty of drivers there, up by 70% year to date. Silver also on the rise. We're also watching what's going on with NOVO, though. And NOVO Nordisk could be a real focus for markets, given a lack of corporate news flow today, but the stock up by 7.4% on the back of that US approval.
Yeah, and interesting that it's actually boosting some of the other healthcare names this morning. Actually, healthcare is the best performing sector across the continent, up more than 1%. So that competition between Novo Nordisk and Eli Lilly, good news not just for Novo with this progress on Wegovy, but also seemingly for the other drug makers as well.
Yeah, absolutely. So will they get this head start that seems to be so important in terms of pitching their product to customers against that rival Eli Lilly in the US market for pill-based obesity treatments? And we will be hearing from the Novo CEO. That is that conversation coming up in surveillance. Mike Dustar will be with the team, the surveillance team, at 1:15 London time. That is it for the opening trade. We have European equity markets putting a brave face on things and actually managing to eke out some gains this morning. The FTSE 100 up 0.1%. The CAC 40 underperforms a little bit. The Stock 600 up by 0.2%. As we head through the European session towards the US Open, US futures are flat to negative. I'll be back with the pulse in the next hour. This.